Learn Accounting Podcast by Professor of Accounting, Episode 24, Depreciation Ledgers. Hey, welcome back to you all. I'd like to go through the depreciation ledger in terms of its layout, but while doing so, I may as well go through the other relevant ledgers as well for all exam boards. So, the first ledger I'm going to look at before the depreciation is, let's look at the non-current asset. So, if we've got, let's say, machinery. If this is the machinery ledger, as an example, this is an example. So this is a non-current asset. Please do use the new terms. Non-current is the non-current. This is the new International Accounting Standards term, and it basically was known previously to that as the fixed assets. It's a fixed asset. So non-current, obviously you've got current assets. Well, the opposite is the non-current assets, which were called the fixed assets. So use the IS terms. So the rule for this is any amount we're dealing with in this ledger, we always think of it as, think of the accounting concepts, we think of cost. So if we can just put keyword cost, this is the historical cost. The historical cost, historical. Now what does this mean? Think about accounting concepts. I see. What does historical cost really mean? Well, it means we can prove how much we paid for something with a receipt value or an invoice. So we always think of the cost value for this ledger, and it's either side, whichever one we're using. So the rules in this case, for an existing business that has some machinery, they'd have a balance BD, and that's on the debit side, because debits mean an increase of an asset. So increase of assets, that's existing. Balance BD at the beginning of the year is existing machinery at cost, because of what they paid for it. So what else could they do during any year? Well, maybe they need more machinery. Well, if they need more machinery, it's going to increase assets of machinery. So that'll be on the debit side as well. So let's say they pay money, let's say they pay by bank. You can have cash book here as well if you wanted to, depending on if you had a cash book in the business. So bank, if they paid on credit to any creditors, a name, you'd have the name of the creditor here instead and use the double entry. So this is the debit side, don't forget. So we're debiting for the moment in time, debiting for this, and this represents here, again, I'd like to annotate ledgers for students to see, so I'm just remembering what space I need. This entry here, where it says bank, so this is any additions. And additions is the nice word to use because sometimes they call it purchases. And if you've studied previous topics in accounting, purchases is a very specific word in accounting because technically purchases only relates to purchases of stock, purchases of goods for resale. Well, a machine is not a purchase item. We don't buy it with the intention of reselling. We might sell it, but we don't buy it with our intention to sell it. So again, that's additions on the debit side. So if we've got additions over here, it's increasing it, then naturally you'd have disposals as the accounting word. So SP, so disposals. So that's the word it means that we're selling. So this is the sale. So again, I need space for the ledger over here. So I'll just put it very briefly. This is the sale. They do use the word in the question, sale of, and if I can use some abbreviations, non-current asset, so NCA. So this entry here, disposal, I think is quite a common word for accounting students to know by now. Disposals means to obviously to sell a non-current asset, but again, if we're selling a non-current asset, well, we're hardly going to be selling this addition during the same accounting year, so we're probably selling, well, more than likely we're selling something from this balance BD from a previous year. So any disposals, if it's gone in at cost price, we recorded at cost price, then it's got to go out at cost price. So again, don't forget that will also be the cost of a particular machine. So this might be 3 machines total, or 4 machines, or whatever. This might be one of the machines. So we need to, obviously the maths need to work out the disposal. So all the red is just notes. Don't put this on the ledger when you're writing it. It's just for notes here. So that's all that happens in a non-current asset ledger. So for machinery, for example, you've got existing, you've got additions, you've got the disposals, the sale of them. So the last thing to do is to balance off, and it's always on the credit side, because you're going to always have some of the machinery. Well, I say always going to have. You more than likely will have some if it's required in the business. It can balance off to be equal, and therefore it's just 0. But most questions are like this, where you need a CD. So balance CD, and then totals. And if you had space here, you can then bring down that for the next accounting period. I'll do it down. Well, I'll do it here. You can have the balance BD again, which is here, and that would obviously be this balance here. Balancing off, quite straightforward. If this is the value you're trying to find out, then you would add up the opposite column, the opposite side. So balance BD plus the bank will go here, move it over to here, and if that's the missing value, the unknown question mark, how do you get that value? Well, if that's the total, take that away from this, and so on. So I need to remove that. I need some space for this ledger. That's the machinery ledger. So I know I took a detour, but it's so important. You need to know the machinery ledger, or a non-current asset ledger, and you could rename this to whatever, fixtures or fittings. You could do vehicles and so on. So it works in the same way. Rules apply. Let's now look at the depreciation ledger. So the title, let's do it in a different color so you can see it. Let's do purple or something. So the title for depreciation, technically it's got a full title: Provision for Depreciation. It's a long title. Most papers now, you do get the layouts given to you, so it saves time in reproducing this. You may see in textbooks something called the accumulated depreciation. It's not the wrong title. It's just accumulated. It's more about looking at from the beginning of when the assets were bought till the end. So they call it accumulated, and it basically represents the value that goes in the balance sheet. But provision for depreciation is where we calculate the value that goes to the P&L for expenses, the income statement now. So let's stay where we are with depreciation. Provision for depreciation. Now, what is depreciation? Depreciation is basically saying, it says machinery or any non-current asset is not going to be worth what we paid for it in the future. So even after maybe several months, obviously a non-current asset can lose value for various reasons, ranging from wear and tear, which is being used, maybe trends in the market, maybe it's not as in demand anymore, maybe there's strong competition from, say, if it's a vehicle, then maybe there's other brands that are more popular, maybe there's new versions of the non-current asset that the manufacturer then makes, so it's not as popular, so its value will diminish, it will reduce. So naturally we have to reduce the ledgers, because the rule in machinery is it's entered at cost. Well, if it's entered at cost price, you have to then make a provision to what's called offsetting. So anything in here will now offset the amount in the machinery, because you don't change the machinery account, including depreciation. You include depreciation in a separate ledger, and then they work together to give you value. So think of it as in some way opposites. So if we've got balance BD of machinery, then we have to have balance BD of machinery depreciation. Now, if this is the machinery for depreciation account, I know there's no space, but you should do a little hyphen and you should do machinery. I'll try and fit it in, and I'll move the other ledger over if I can. So provision for depreciation machinery, you have to relate the depreciation to which type of non-current asset. So if this is for machinery, it's obviously relating to the machinery ledger. If this was a motor vehicle, then you'd have a separate provision for depreciation for motor vehicle. So this balance BD is the accumulated depreciation at the start of this period, which has come from all previous accounting periods from when the machinery was owned. Okay, so that's existing depreciation. Now, when we obviously what could happen during the year, we'll take the situation over here. Let's say we've bought more non-current assets. So when we depreciate during the year, we're going to depreciate for all assets, all fixed assets, non-current assets that we own, that we have on our books. So that's going to go to the income statement. Previously, the P&L. I know it's a lot more to write. Income statement, which is a value, or I'll put it in because it used to be called, it's still accepted I think to an extent, P&L. So P&L. So in this case, why is it on the credit side? Well, when we make the entry into the P&L, this is the double entry. This is the credit side, and this is the debit side. So we're crediting the depreciation because we're debiting the P&L, and a debit to the P&L means an expense, and that's what depreciation is. So we're going to be working out that value, obviously, and if we had a question, and that's going to be the depreciation for this year. So this entry here, this one, I'll say this and I'll mark it. The balance BD is the accumulated, and that's for all previous accounting periods. So if we're looking at 2012 as the accounting year now, 2012, then this would relate to all previous years backwards from that when we owned the non-current assets. So maybe they had it for 3 years, all the machinery for 3 years. It goes back 3 years. Well, this would then be the charge for this year, for 2012, of all machinery that we had. So if we actually managed to sell some of the machinery, then we need to take that into consideration. So therefore, it is likely that we would have to remove some depreciation. And why would we remove depreciation? Well, if we dispose of say machinery, then we need to remove the cost of the machinery, and we don't need the depreciation that relates to that machinery, because we only depreciate for assets, fixed assets, non-current assets that we actually have in the business. So we're going to have an entry for disposals again. And that entry here, disposals, this therefore then, disposals, this again, you see this disposal over here, there is a connection, but this will be debiting the depreciation. Well, what does that mean? That must mean, if this is existing depreciation, this is the depreciation for this year, then that must be meaning we're reducing depreciation by the amount in which relates to the disposal machinery non-current asset. So that's disposals. So existing, charge for the year, which is obviously new, and then you've got disposals, again a similar structure. The last thing to do is to then balance it off, balance CD, which goes obviously here, and again when you're working that value out, this is the missing value, the unknown, so question mark. So you can work that out by using the credit total. So credits, add these up, move the total over, goes over here, cross, and the total minus the disposal value, and you get the answer in that case. And obviously I suppose just to rule off all your ledgers. And I do like it, you just get marks as CD, but I do like to bring down the CD to BD, and that will go there as well. Okay, so that's the depreciation ledger, which is the main thing I want to do. So I've already mentioned disposals, so as you can see, the third ledger will be for disposals. So disposals, and doesn't have to relate to any particular fixed asset, non-current asset, but when I do this, I tend to show this disposals relating to the one we're selling. So in this case, it'd be machinery. So disposals, machinery. If you sell several machines, you can use the same disposal ledger. However, if you dispose of a machine and then you dispose of, say, a vehicle, you'll see after I've finished this ledger, you're going to see that you're going to have to use a separate ledger for obvious reasons. Right. How would you do disposals? Well, actually, the reason you do disposals and you last, especially in OCR questions, is because you've already got the double entry set up. So wherever you see disposal, you're going to make that entry in here on the correct side. So let's do looking at the journal. Remember, the journal is the list of double entries that you might make. Machinery is credited, so disposals is debited. So in this case, DR is this side, CR is this side. Debit just means left, credit just means right. So disposals, you're going to make the debit entry, and this is going to be machinery. So machinery goes on the debit side, and then the value. And if you go over here, there's disposals as well. So disposals, we're debiting the depreciation, provision for depreciation, so we're crediting disposals. So provision, do write the full labels. I know you need space on your paper, but don't just do PDD, provision for depreciation. You can in your working, but always do the full. Leave space and fill it in as best you can. And there's the credit. So just, again, be careful of how you do this. I still see students that they think credit disposals is that's what you're doing. It's not. The credit belongs to the T account that you're looking at now. The debit belongs to the T account you're looking at now. So we're crediting not disposals, we're crediting the machinery. So we're debiting disposals. In this case here, the depreciation ledger, the debit side here, we're debiting in the depreciation account, so we're crediting disposals. So make sure that obviously is a true reflection. Basically, the disposals account there, well, machinery is a balance. If you really think about this, the machinery balance that you're disposing it was here, somewhere here on the debit side. I hope you can see this pen moving. It's on the debit side here, and you're just moving it to the debit of a disposals account. Depreciation is over here on the credit side of the depreciation, and then you're doing an entry here just to remove it to be on this side. So the accounting ledgers are still operating in the same way. The rules never change, and now obviously you need to now make a new step. So what are we trying to do in the disposals? Anything to do with disposal, let's look at some key points. The disposals, we're trying to work out whether there is being, I'll do notes down here actually. So we're trying to work out, so this is legit, we're trying to work out profit or loss. Profit or loss on disposal. I don't mean profit or loss in terms of the income statement. Profit or loss on disposal. So we need to really look at, for the income statement, when we're producing that, the trading and profit and loss account, the income statement it's called now, we're trying to work out when we disposed of this non-current asset, did we make a profit? And I should say, sometimes they call, well, it's a gain. A gain is a profit, and they use loss as well. They don't use I don't think anything else, but a loss is the opposite. So let's think what we mean by this. We can work out at this stage, we can work out net book value. So we're comparing net book value. NBV is net book value, and that's the worth. What is net book value? Well, that is cost minus accumulated depreciation. Now I'm going to write this in full because I had a few people just questioning when I did this. They've never seen this before, which is shocking because if you're learning depreciation at any stage, very early on, you need to be introduced to these phrases, these terms, this way of writing it as well, because I use this all the time in the balance sheet, the 3 columns. So I'll write, again, I've wrote it here, so accumulated depreciation, again, means all the depreciation. So there it is, accumulated and then depreciation. You can do that. So NBV. So we can do that here. If you have machinery, well, remember what value that is. That value represents cost value. Machinery at cost has to be cost. It has to be you're removing it at cost price because it went in at cost price. The depreciation is obviously, this is the accumulated AC. So accumulated. This is just notes. Don't write these extra bits on. This is just notes. Accumulated. So if you have these two values, you can take them away. This minus this, and you get NBV. What are you comparing this with? We need to know also proceeds. What is proceeds? Proceeds, well, this is the amount you receive. So money received. Assets, it's money received on disposal. So if, let's get this right, PLSAL. So when we dispose of this machine, it's how much we received for it. So proceeds is the key word for the money received. So if we record that first, that's an important step to record first, the proceeds. Well, what's the entry going to be if it's money received in the cash book? You don't need to draw the cash book, but just illustrate. If, let's say bank or cash book. If this is bank, bank's an asset. So if we increase assets for the money received, bank would be on the debit side. So we're going to be crediting this, and this is always the case. So we'd have bank or cash book, whichever one you prefer. I mean, they could tell you they paid by check, so it's bank, depending on what it is. There's the entry. That is always on this credit side, because bank or cash book is always debited. So that was a constant. That'll always be there. This is the trick bit now. Leave a line. Do your totals. Total. Now, you need to make an entry somewhere in here. I'm going to have to do this here or here. On which side? You simply have to know numbers to work this out. And this determines whether there's a profit or loss. So I'm going to use some basic numbers just to illustrate this point. Very basic numbers. Let's say this was £100 for the machinery, a cost. Let's say depreciation was £50. Straight away, over down here, we could work out the NBV. 100 minus 50 gives you £50. That means that this machine was bought for £100. We've reduced it by £50 over several accounting periods to give it a value, and the current value upon disposal when selling is £50. So the question now is, how much did we sell a £50 machine for? Well, I want two answers because there's two possibilities. I either sold it for more than 50 or less than 50. So let's do the situation where we sell it for. So let's do sale. Let's get rid of this notes here. And what I'm going to do is I'll do two ledgers as well to remove. Let's get rid of that. Okay, so hypothetically, let's say we sell. Go into red. Okay, so if we sell for. This is just notes. Let's say we sell for £75. So that's a £50 machine worth for 75. Well, if you think about it, if your mobile phone was generally worth £50 and you sold it for 75, well, you've made a profit, haven't you? That's a profit of £75 minus £50, which is a profit of £25. So how would you represent that into ledgers? This is just the first one. So if we sell for £75, well, we record that. This would therefore be 75, because that's the proceeds. We sell for 75, not 25. We don't record the profit in here. The profit is in terms of the proceeds. Let's put proceeds in here. This is proceeds. So bank means the proceeds. This is where the ledger will then tell you. So we add up the ledgers. Which side is bigger? 75 and 50 is 125. That's the credits. Debits is 100. So the 125 is the total. We move it over. 125. So therefore, we need more on the debit side. We need £25 on this side. So what is that number relating to? Well, that will go into the income statement. Previously, the P&L, income statement. And what entry do we make in the income statement? Well, we're debiting disposals. This is a debit to the disposals. Hopefully you can see this on the debit disposals, and we're crediting the income statement. So a credit to the income statement, this is the big rule. This means a credit to the income statement means an increase of other revenue income. It's other revenue. It's not the main income. They don't make income is from sales. Their core income is from sales. This is another way of making money, but it's not their main source of making money. So that means it's a profit. This is a profit on disposal. Very important. You can write that. Some marks in OCR papers, they want you to state that, so you actually are confident you know that the credit entry there to the income statement is a profit on disposal. So that obviously is showing the profit, and it all depends upon the number. Now, I don't have much. I'll do it again. I've got some space down here. Let's now think of this as what would it look like if there was a loss on disposal? Well, basically, you have to sell the £50 machine for less than £50 to make a loss. So I'm going to quickly just do that ledger. If we do the disposals ledger again, you need to look at this podcast from the beginning, because you can see how busy the working gets, and especially I want to fit it onto the screen. So again, this is the disposals. This is so disposals for machinery. And I'll just be brief. This was the cost. Everything's the same. So that was £100. This is the provision for depreciation, and I said £50 for that. So that's all. That has to stay the same. What is going to change is if I do as a selling price. So we sell it for £75 previously. Now obviously I can't sell it for the same, because it'd be the same answer or anything like this. It has to be less than £50. So if I now sell, let's say I sell it for let's say £40, you can see it's going to be for £10 less, which means a £10 loss. Let's show that in the ledger. I think it's straightforward to see, but the ledger needs to be the showed in terms of the working and completed. So we sell for £40. Well, that is your starter. Whatever you sell for is the proceeds. So your bank or cash book, whichever you prefer, bank. And look at the side I'm using. Why am I using the credit side of the disposals, not the debit side? Well, we credit the machinery because we debit the bank or cash book, and that's the increase of the assets. So proceeds, and this is £40. It didn't change in terms of the entry we made. The same entry in the disposals as we did over here. Same entry there as well. It's just a different value, 75 and 40. So that will never change. And then in this case, I will move down. Okay, I can move it a little bit down. Then we leave the line, because we need to see which line. We do it right here or do it right there. Now if we do right here, we've got to right at the top. We do further. So we can actually see that's what we need to do. Why? We need to write over here because 190. So do little toes, 190. So it's 100. Move it over, 100. And this needs 10. So therefore, income statement £10, and do write what it means. It's important you write the information. This is a profit on disposal. It was on the debit side. See the debit side? This is on the credit side we need. So this would be in brackets loss on disposal. There we have it. So just tidy it up. That is the alternative way to do the disposals in this case. Well, obviously showing a loss with different values. I hope you find that useful. I mean, if you look at that, the layout there and the working, it's incredibly busy going on there. Hopefully you followed that. Do watch it again if you're not too sure. It is so important you learn the structure of these ledgers, especially all of this, especially for OCR, AQA. They tend to ask you maybe for one question they ask for this. In the AS, they could ask you for the depreciation ledger as well, and obviously there's both disposals, but they tend not to ask all of it together. It's only OCR that does that. So hopefully you find this useful. I hope you find it of a benefit, whether you're revising this or whether you've actually just started learning this. I want to thank you for stopping by. Please do rate the podcasts and give me some feedback. Obviously on the presentation. Hopefully the sound is improved. The last 10 or so podcasts that I've put on, the sound is linking to the working. I know previously many of you are mentioning wonderful feedback about the slight glitch in technology, but that should be fixed by now. So again, if it's not, just let me know and I'll have a look at it again. So thank you for stopping by. I'll see you again for another podcast from Professor Accounting.